second full week of the new year, and we're looking at usual the May 2015 week chart. And we've got the monthly, we always start with the monthly chart at the present moment. And you can see here we've got this red candle in formation as we head towards the middle of January. Obviously taking out the close and the lows of the December, this indecision candle here. The trend, obviously you can see, is clearly down at the present moment on the monthly chart. We've had 3 rising months. We're obviously looking to break out of this close here of the December candle. This looks to be failing in quite a major way. The RSI is dropping down. Last line of support on here is the 5 monthly moving average here, which comes in at 129. So we'll pop down into the weekly chart, and you can see the weekly chart here. You can see our two yearly trend line. You can see here that we've got this big weekly candle here. You can see on the RSI we've dropped below the 50, the center moving average line. This last happened here when we broke the on this chart, the simple moving average, the 20 weekly moving average, the green line here, was the first half of 13. This was about March of 2014 when we lost the support here of the 20 weekly moving average, and we dropped below it, and you can see here that we're coming down to test it at the moment. So it's like Sir Custer's last stand really. We should find support around this level, but obviously if it doesn't hold, you know, the close tonight, being Friday night, will be the crucial on this formation of this weekly candle. We'll pop down into the daily chart, and you can see on the daily chart my Elliott wave calculation, my new one that I put last week. You can see here this was a 3 wave, and we were looking for a consolidation. The trouble is that consolidation has come far greater than I thought it would be, and has broken the 60-day moving average in the process and given us a gap, and given this signal on a rising volume. So crucially, it's putting alarm bells. You know, I can see now that the last 3 to 4 months upwards trending against a counter trend down move has been officially broken. Obviously what the market now does next, we need to show its hand, and that's what we're looking for clues at the present moment. Obviously we've got 3 options. Obviously the market's going to go up. Well, we need to find support at this 120 level. We need to regain the 60-day moving average. We need to break the highs, and then our target is up here at 175. So there's quite a lot of action to do in a short space of time to regain this if we have an up move. Down move, we need, we're resuming the trend, a monthly trend, a long-term trend. We need to take out the support here at 129 on a daily close, and we need to complete the head and shoulder pattern, which I'll show you on another chart, and that gives us targets down here 115, 116. Or if these 2 options don't take place, then we just go back into a sideways market, which fortunately on our longer term plan, which we looked at the end of December, was a possibility, and that seems to be coming to fruition at the present moment. So obviously, what have we got to look for at the moment on this to give us any clues? The RSI is failing. We've dropped on the daily chart well below the 50 line. This was last seen in May last year, when we also saw the break of the 60-day moving average. I've gone back over the last 3 or 4 years, and obviously the 60-day is a crucial to holding any trend. And normally when you do see a break, you then see a good move. So we just pop down into show you option 2, which could come into play. I've identified a possible head and shoulders pattern, which is a change in a trend. Well, we have got a preceding trend, an upwards trend against a falling downwards trend. This is the left head and right hand shoulder. This is the neckline. We've broken the neckline. The neckline also is in confluence with the simple moving average, 60-day moving average. I'm looking for confirmation of this break. Time is the main confirmation which I would look for. Three daily closing candles below it will give us a good indication that this pattern is coming to fruition. Also, we'd like to see it come back and retest the break of this 60-day moving average and the neckline. And then if we do see that, then we're looking for probably possibly sort of 15 to 20 pound ton drop down to here to 116 to go back and test the lows. So obviously all quite crucial at the present moment. Out of the three options at the moment, unless we regain this gap tonight on the close or early Monday morning, then unfortunately I can see us slipping back into a falling market again, and we could see the lows tested. But obviously can't predict this till we get the signals. Obviously closely watching over the next 2 days to give us any clue. Volume is spiked up on this break here, which gives us an indication of selling. So on my heart of hearts, it looks as though we may be failing, but obviously we just need to get that confirmation, which I'd like to see, and then we could follow it in the direction of the new trend, and we'll keep an eye on that. I've just had a look before we finally close on the new crop here, November. This is the November 15 chart, to see if that's reacting the same way as the old crop. And yes, you can see here we've had this break of the 60-day moving average quite clearly with the gap, and we've even got a bigger candle here. So that is sort of confirming, as with the old crop, that that has taken place. There is a gap here on the November here coming at 137, so I would look support here, sort of 135, this kind of level. So obviously we'll have to see the close again tonight, and I'll put an update this time next week. Thanks for watching.